Good morning, this is the latest market news. I am Uliana. Asian stocks were mainly weaker on Friday, with the Nikkei ending the morning down ahead of Bank of Japan policy review, in which the board unanimously, as expected, stood pat on its monetary-based policy target and pace of asset purchases. Japan's Nikkei 225 index traded down 0.38% in the afternoon session, despite a weaker yen, while Hong Kong's Hang Seng dipped 0.41%. Overnight lackluster manufacturing and jobs data sent US stocks mixed to lower, though optimism that the US economy is improving, evidenced by the Federal Reserve's decision to taper monthly bond purchasing, cushioned losses. On Wednesday, the Fed announced that it would cut its $85 billion a month bond buying program by $10 billion in January now that recovery is gaining steam. Fed bond purchases tend to weaken the dollar by driving down long-term interest rates that send investors to assets-like stocks to encourage investing and hiring. The US dollar has risen to its strongest level in almost 2 weeks when valued against the euro as investors continue their shift back into the world's reserve currency. Opening this morning strongly against both the euro 1.3655 and the yen 104.159, the US dollar surge looks set to continue through to week's end. UK third quarter final gross domestic production, 9:30 GMT. The final gross domestic growth figure is expected to come in at 0.9%, which in annual terms would mean 3.6% worth of growth. Sterling has been quite volatile in the forex markets. The British pound began to strengthen after the third quarter gross domestic production indicated a relatively strong recovery, and recently the trend was further boosted by unemployment dropping to lowest since 2009 and robust retail sales. On Wednesday, the Bank of England remained that the strength of the currency would begin to have a negative effect on the country's export sector. It was the latest market news provided by ICO FX. Goodbye.